You're doing. Um, if you haven't set a stop loss last night in that sharp decline, you would have been stopped out, or your entire portfolio could have been wiped out, right? And today morning, we started trading back to back, and we made about, I think 90% so far just scalp trading 5 minutes chart. Today, I'm gonna teach you a strategy which you can use and you can trade any time of the day, even during the weekend, and make money. If you lose money, that's common. That happens to everyone once in a while. But in order to recover that real quick, you need to understand how to trade 5 minutes chart. All right. So today I'm going to teach you something that's going to help you a lot in trading 5 minute chart. So we call it turtle soup strategy. So what is turtle soup? No, not what you're thinking, all right? It's not a soup with turtles. I'm gonna talk about a strategy that you can use to trade 5 minute chart. So first of all, you need to understand what an OB is, what a fair value gap is, what a liquidity is. All of those are there in the basic level of smart money concepts in this Discord. Like, go back to those topics and see what they are. Like, what is liquidity, what is buy side liquidity, what is sell side liquidity, what is an OB. All of those are basic things for you to understand if you want to understand what I'm talking about in these videos. All right, so that is like a basic requirement. If you don't understand, and if you started directly with this strategy video, it's fine too. Like, all you have to do is to get some indicators and make sure those are on. Some of those people who are familiar with all of these OBs and liquidity and fair value gaps, buy side liquidity, sell side liquidity, they can see everything. Like, see, this is a fair value gap. Like, I don't have to have an indicator to tell me that this is the fair value gap, right? So you have fair value gap here, and then you have liquidity here. This is liquidity, and here you have equal lows. All of those are obvious for someone who's trading for a long time, and they can see what is happening. And here you have an OB, right? It is very obvious, and it is seen with the naked eyes for someone who is trading for a long time. But if you are not trading for that long, you may have to wait a minute. Oh, that's all right. Okay. Coming back to this, what I'm gonna tell you is that you have to understand all of those concepts. That's when you'd be able to grasp what I'm telling you. All right. So then go to the smart money concepts. This indicator is pretty good for you to see where the support and resistance are. Even though it is obvious and it is clearly seen for people who are trading for a while, you can see this, very clearly. Like, it is clearly delineated, and you can see where is what, right? So here you have a strong high, here you have a strong low, and then you have the OBs, bearish OB, bullish OB. All of those are clearly indicated in all of these, right? So what do we do now? Like, how do we trade this? So let's say we are gonna trade 5 minute chart, and now we're gonna look for long positions or short positions. So when do you go for a proper short position? So let me tell you. So here you have a strong OB. You have to go to the 15-minute charts, by the way. Like, that's where you get a proper indication and proper support and resistance level. So that is the best place to find support and resistance. If you go lower or if you go higher, you would be able to trade the 5-minute chart, right? So the first thing is to identify the OBs and the support and resistance, everything on this one, and then get this indicator, buy side and sell side liquidity. Check on a 5-minute chart and see where the buy side liquidity and sell side liquidity is. So for example, so here there was buy side liquidity, and then there was a deviation. So what happened? We swept the liquidity here. You have to wait for I told you on the 5 minutes, this is an internal liquidity. All right, the best short position is when it sweeps above the strong high, like something like this. So here, whatever we traded today were risky trades, and that's why we had to just scalp trade, like go up and down within a small range, right? But if you have to go for a confident swing position, it has to go up, deviate, and make a change of character or market structure shift, right? So here, this is where a market structure shift occurs, and that's where you could take a short position that is like confirmed entry. So you place the stop loss above it, and then you target here, and that is like a risk reward ratio of 2.06. So that's a decent trade, right? So in order to take a perfect trade like this, you have to wait for this to happen. So here, even though we did not have a proper price action today, I still traded, if you want to take a proper trade, you have to wait for 15 minutes deviation. So here there was a change of character, and then you can take a short position. See here, and you target the immediate support. So you take your stop loss above the previous wick, and you target the previous low, that is equal low. Like, what do I mean by that is see, one bull candle and bear candle have same close or open, so that's what you call it, an equal low, and then you target that. All right, so even though it didn't hit and it's going up, I think it's gonna come down a little bit and then go down, right? And then you have to have imbalance finder, that in order to find the fair value gaps, right? So here you have imbalance finder, that's gonna show you where the fair value gaps are, and here you see that it invalidated completely. So it is gonna go, okay, but that's not the topic right now. What you have to do is to understand where the fair value gaps are, just to make sure that you're not expecting something and not being surprised by something, because the fair value gaps always get filled like 90% of the time. All right, so if it does not get filled, it is an invalidation. So for example, here, this is a fair value gap, the blue one, and then it goes up, it invalidated, then what's going to happen is it's going to come back and fill this fair value gap and go up, and you can trade this previous high, right? So it is that easy to trade. So how much is this on a 10x leverage? 8% done. And that's how easy it is to trade 5-minute chart. Coming back to the concept, so what is a turtle soup? Turtle soup is buying below sell side liquidity and selling above buy side liquidity. So this is what we call it as turtle soup. Okay, so what do I mean by that? So here you have buy side liquidity. So you are gonna I'm sorry about that, I should sell below buy side liquidity and buy above sell side liquidity. What do I mean by that? So here you see the buy side liquidity, right? It is swept and then it started coming down, right? So whenever the buy side liquidity is swept, so that is when it is swept, you call it liquidity grab, right? So you set a short position with the stop loss above the previous high above the buy side liquidity. So here, this is buy side, internal buy side liquidity, and this is the previous high, that swing high, right? You put your stop loss above it, and then you target here. Where do you keep your point of interest? The next available fair value gap here. You're good. So that is 3%. Perfect. You get it? So that's how you should trade. All right. So this is what we call it as turtle soup. Okay. So let's take another example. So this is a 5-minute chart. Let's go somewhere else. So here, let's trade this range. So here you have sell side liquidity, and then the sell side liquidity is taken, and in this range, you don't have any fair value gaps, so those are already filled. So which one do you target? So here, this is a liquidity is taken. You take a long position, and your stop loss above the previous high. So that is here, this one right here, right? So you place your stop loss below that, and that is like 0.87. That's where you'd lose that position, and you target the previous high because you don't have any fair value gap. Perfect hit, right? 2.83, and that's like 3.23 risk reward ratio, and then that's a perfect trade, right? So that's how you trade small ranges. So in a nutshell, what you have to understand is you sell below buy side liquidity and buy above sell side liquidity, and the next step is to target fair value gap if available, and if you don't have a fair value gap, target previous high or low if it is a short, long or short position, and place stop loss below previous low in a short position, and vice versa. So that's how you should go. I hope you understood, and this is how you trade 5 minute chart. All right, so I'll put this in a checklist, or I think this is good enough. You can just see this is like a step-by-step thing that you can do, a methodical approach that you can follow and trade 5 minutes chart. All right, I hope you understood. If you haven't,
Happy Thanksgiving Day!
Addiction, you're my strongest inspiration, and I love you. It's true, there's no mountain I could not climb as long